Is gold cheap? Is silver cheap? Let's find out. Okay, so first up, here we have a historical chart of gold prices, and every investor would probably look here and he would conclude that, I mean, your typical investor would say, oh no, or let's say speculator. He's not, let's say, he's not very informed. He's gonna look at this chart and he'll say, oh no, gold is at an all-time high. How could it possibly be cheap? Let's go to a silver chart. He will maybe conclude from this one that, hey, silver may have um, another run in its back pocket. It could go to, let's say, 40. But what if it goes back to 4? It's probably expensive. Well, is it? Now, your most informed investor would like to see not a linear chart, but a logarithmic chart, because you can see the price movements a bit more clearly. This is a linear scale chart is only capturing like very big moves, but on a logarithmic scale chart you can see the percentage move. So an informed investor would click this button, and you can see that this becomes a lot more easier to read right now. Let's do the same for gold. Now, if you are a really, really informed investor, you're gonna know that you need to beat inflation, right? Because if you're not ahead of inflation in real terms, you're losing purchasing power. Because even if your investments go up at, say, 5% per year, but inflation is at 6%, you are effectively losing 1% every year. So the next step of an even more informed investor would be to click this button here and adjust for the rate of inflation. And something miraculous happens. We see that maybe gold is not actually that expensive compared to 1980, because yeah, if you remove the adjustment, you'd say, oh hell, it's a lot more expensive. And yeah, also this doesn't really go to the absolute record in 1980, because it was something about $800, so it's probably a weekly average. But anyway, that's just noise. So we can see that inflation adjusted, now we are not looking so expensive compared to 1980. Like, we are on the same level. Now, if you are an even more informed investor, actually we didn't even click the inflation, the adjustment for silver. So yeah, silver is, with the adjustment, is actually cheaper than it was in 1980, and even than it was in 2011. Gold is basically in the same level, but there is a downtrend. But overall, it seems like it's expensive. And silver right now, it's maybe closer to the mid-range, let's say. But as I was trying to say, if you're an even more informed investor, you know that this adjustment with inflation is with the number that the government is putting out. That is the inflation that the government admits to. And we all know that before 1980, there was a totally different formula that was calculating inflation. And if we used that formula today, the inflation number would not be 6% as of October, November 2021. It would be probably closer to 15%. Okay, but how do you know that? Well, you can just search for shadow stats, alternate inflation charts on the SGS Alternate CPI, and this was this alternate CPI. This is based on the formula before that was used by the government before 1980 or 1990. Choose your poison, you know. So if we used the formula from 1990, the inflation number would read 10%. But if we used the formula from 1980, the inflation number would read closer to 15%. Okay, so if you would go back to these prices and the algorithm behind this chart would actually use the SGS alternate CPI number, these prices back here would be a lot higher than what is currently shown. So with the government adjustment, silver in 1980 was $126 in today's dollars, right? Here right now is about 24, 25. 2011, the actual nominal price was somewhere around $48, but here is like closer to 60. And we can actually go to a 10-year daily chart and check it. Yeah, but they do not, we don't have the option to adjust for inflation. So yeah, it was 48.70, something like that. It was the nominal high. And for gold, in 1980 was about $2,300 in today's dollars. In 2011, $2,200. The peak in August last year, $2,100. And right now we're sitting around 1,800, 1,900, something like that. But if you would adjust for the SGS alternate, these prices here would be a lot higher because you would need to compound the difference, you see, between these two lines, between the blue line and the red line. Like, can you see how much they are understating inflation? Like, look at the delta here. This is 0%. This is probably 2015, something like that. And here is probably closer to, call it 8%. So imagine compounding that year over year over year over year over year, you know? You would probably have like $10,000 or $20,000 here. But I also want to show you that there's another way to see if gold and silver are cheap, and that's by comparing them with the M2 money supply or currency supply, whatever. We're gonna use the official term of money supply. We all know, yes, gold and silver are money, and paper money is currency, but we're gonna use the official terms here. So we can actually just look at the money supply. So we go to Fred M2 money supply just to get an idea, and they actually discontinued it. That's interesting. So we can see that from 1980 it was at around 1.6 trillion, and right now, well, actually at like 2 months ago it was closer to 20 trillion. And now if we go to trading view, and I'm gonna do this with you again. So this is the gold price, and this is a monthly chart. Okay, this is some noise here, but this is a monthly chart of gold in nominal terms. So this is not inflation adjusted. So you could say that gold is right now about 163% more expensive than it was in 1980. But if we adjust for the government inflation, we see that they are about the same as they were in 1980. But now we can do an adjustment with the money supply. And the way you do this, you click here, you go to trading view, I don't know, you make an account, you do your own thing, but then you go here, click, you're gonna choose gold. You know, you can write anything here. You're gonna write gold, press down button on your keyboard, then you're gonna click here. This is the sign for divide, and you're gonna search for M2 money stock, and you're gonna choose this, and then you're gonna press enter. So now we have a chart that shows us the adjustment of the gold price compared to the M2 money supply. So as we can see, this looks quite more different. We can actually add a compare with the price of gold. And it doesn't look this so good, but yeah, I'm gonna, because the change compared to the money supply is a lot smaller, right? The percentage change of the price of gold compared to the money supply is a lot lower than the nominal change of the price of gold from 1980 to today. Okay, so we can see that from 1980 until today, the price of gold compared to the money supply looks a lot cheaper. And in my opinion, it is a lot cheaper. You know, when you compare it to the money supply, the gold price right now is about 78% cheaper than it was in 1980. And in my opinion, this would be the same story if we had a chart that would adjust for the SGS alternate. You would probably see that, let's say that if the price in 1980 was around $10,000 and now is $2,000, that's about an 80% reduction. You know, it would be 80% cheaper. So comparing gold with the money supply is, in my opinion, a better indicator than just looking at the inflation adjustment based on the inflation number that the government gives us. So 80% cheaper than it was in 1980, and it is actually about 55% cheaper than it was in 2011. Even though if we look here, inflation adjusted, they look the same, right? There's like it doesn't seem to be cheaper than in 2011, but comparing to the money supply, it is, because from 2011, right, the money supply was, call it 9 trillion, and then it doubled. So it seems only logical that gold is about 50% cheaper compared to the money supply. And also we can do the same for silver. I just go here, modify the formula, type in silver, press enter, and boom. Let's see how cheap is silver when we account for the money supply. 1980, today, 90% cheaper. 90% cheaper. So if we were to go to the same valuation from here, silver we need to do about a 10x. And that, honestly, that would be about $250, right? With the caveat that M2 is gonna be constant, right? So silver should go up about 10x from here to have the same valuation that it had in 1980. Let's compare it to 2011. Silver is about 80% cheaper. So that's, again, about a 5x. Silver should do a 5x to reach, close to a 4x, 5x to reach the same valuation that it had in 2011 when you compare it to when you account for the money supply. So that was it. I hope this puts another perspective on metals for you guys. If you like the video, consider leaving a thumbs up, leave your thoughts, your comments in the comment section below. Consider subscribing, and I'll see you in the next video. Thanks for watching. Bye.